Welcome back to the chat once again. It's a new month, February. We made it through January. Towards the ending of the month, the close, it was rough in the sense that we took out higher time frame liquidity on DXY, and then the rest of the week, except for Friday, which we saw an expansion to the upside, was still capped in consolidation. All right, so we continue the story from today, and as we have always done it, we'll start with Sunday to give us the path to take for the rest of the week. And then every day of the week, we'll come to analyze to see how the price and the market is treating our levels, our key levels, and our higher time frame targets. So what I have in front of me is a dollar index, the monthly chart. And also let me quickly draw your attention to the coming week. It's loaded with red folders. From Monday, Tuesday, there's news for dollar. Wednesday, there's news for dollar. Thursday, GBP, euro. There's also unemployment claims for Thursday. ECB conference Thursday, and then Friday, non-farm payroll. So it's going to be one of those weeks, that opens a month roughly. Now, what this level you are seeing, this key level you are seeing here is coming from the quarterly, the 3 months. Let me show you here. So it's coming from this level here. We closed above it and used that as support here. Price has now traded to it for the first time. On the monthly, also we do have this small gap here, right, being housed in the quarterly inefficiency level. So the same thing traded back to it, perhaps also trading below these higher time frame liquidity levels. Now I want to draw your attention to this, right, I wanted to draw your attention to this consolidation that we've seen on the chart for some time now. And if you will bear with me, you will understand that we had nice expansion here, right, which is leading to this consolidation that we are seeing. We already know that from expansion, market goes into consolidation, right? I mentioned this last week during the reviews. After FOMC, you saw that price was caught up in a range. It's the same thing if we assume that this is an hour chart or it's a daily chart. We have a very nice, we went from expansion here to consolidation, right? And then expansion again. So we are seeing consolidation, right? And so price has rejected this liquidity level very hardly for the month of January. Is it likely that we are going all the way to the top, or are we going to see a continuation or a pullback and then a continuation to the downside? Whatever the case is, we'll find out, because we cannot go ahead of the market, but rather we'll stay with the price and see what price takes us, or where price takes us. Go according to what price does, so that we don't get ahead of ourselves. Let me switch to the weekly to see what we have. Now the weekly candle, as we see from last week, we came, swept this liquidity level, tapped this for the first time, and we ended up like this. This is a very huge rejection there. You recall that on Thursday, I was calling this as my near-term target. And then I gave some, when we go to the H1, I'll show you where or what I wanted to see before price comes down. That didn't happen. However, I must admit that on Friday, I made a took some trades and then I took some losses there because I didn't do due diligence, but that's okay. It's all part of business. So what we are seeing here is a nice rejection from the this level. So this is now staying open. I mentioned that I wanted to see this one stay open from Thursday's review, I think Thursday or Wednesday. Now, in the meantime, so let's see what we can ascertain. Now that we have this, I would wish that perhaps price comes back to filling this leg, right? This wick a little bit before we move to wherever price wants to move to, right? Like I mentioned earlier, we are not going to go ahead of ourselves, but we are going to stay with price on the daily, on the H4, and then see what price is telling us. All right. But usually what I love to see is, or what I usually see is when we have a wick, a lonely wick like this, price usually loves to come in and close some of that before whatever move ensues. So I do not know for the coming week if that's what is going to happen, but we'll definitely see as price unfolds, right? So on the dailies, let's see what we have. We do have this opening gap staying open, and then we have this inefficiency level all the way from the close of this candle all the way to the open, still open, right? And then we have a very nice bullish close above the previous day's open. Yeah, this is a very good sign of price wanting to break away from the consolidation and into the range, right? So what is going to be my range going forward? This high here all the way to this low, right? So I would love to see what price does in here. Okay. I would love to see what price does in here. So the opening gap is from this level here all the way to this. Let me draw that out. From this close to the opening of this that's the opening gap. So we'll see what price does from here. Okay, that would help us make an informed decision for the coming days of the new month of February, right? Let's see what the H4 is telling us. So once we haven't closed above this one, but this is the expansion from Tuesday, and every other price action has been within that except for Friday when we saw an expansion to the upside, right? So moving forward, if we see a close above this open, Tuesday's open, that would sort of confirm that price wants to move higher. Also, if price closes above this opening gap, it could be used as support moving forward, right? That's something like this is what I mean. If price close above this opening gap, we could possibly see a pullback into it and then use that to go forward, right? So I'm saying that we are going to monitor what price does in here, okay? If price is going to give us indication on the H4 that it wants to trade lower, we left an opening gap here also. Price traded back into it and then run away. Let's see here. This is the close. This is the open. That's it. You saw price on Friday closing, trading back to it, and then using that as support for expansion, right? So let me label that so it's easy to. So whatever happens here, perhaps Monday, Tuesday, or any day of the week, you should be keenly watching what price does here. If we close above the opening gap, it's more likely to see it being used as support to trade higher, right? In other words, if it trades back below and the H4 order flow tells us that price wants to go bearish, we'll take the necessary steps and trade to wherever price wants to take us back to, whether we are likely to trade back to this low again, or price will rather continue from where we closed off for the month of January, right? So on the H1, so this is okay, so this was Thursday. Let me take you back. Thursday, I mentioned that on the H1, I wanted to see a close below this level for a continuation lower. So I said I wanted to see price close below this and then use this for an expansion. That never happened, right? That never happened. That never happened. So we can be, there's two sides. You can be wrong for the daily bias, but still not take a trade. In the sense that we need to see certain signatures happen before we confirm our bias. But however, on Thursday, where I made a mistake, where I actually made the wrong call, was when I saw price do this, take out this high, right? Also this high. No, didn't really take out this high. Take out this high, closed below this one. See, because I was holding a short bias, I was holding a short bias for the dollar index. This is where I made the mistake. So as soon as I saw price close below this level, this is where I went short. Now, the mistake I did, and I must tell you that I shouldn't have neglected this. We were trading into key level where price could bounce off of, in the sense that price was trading into the opening gap, right? Ideally, you want to see price trade below the opening gap and use that as your resistance level, right? But you don't short when price is trading right above the opening gap. Even if you would, I should have waited to see on the M5 or M15 signatures that shows that price really wants to trade down, right? But I may come back to that. I'll probably do a video and explain what I want to let you know. That you may still have, it's possible that during the review, I would have expected price to trade down, in the sense that I wanted to see price close below this. It didn't. And then we gapped up, traded above this, came back to the gap again, traded above this, and then closed below it. There should be signs here on the lower time frames to tell you that indeed price wants to switch. Or ideally, you wait for price to close below the opening gap and then use that as a resistance for the target I was looking for. That I did not do, and so I got punished for that. That's okay. We live to trade another day, and we trade to learn our lessons, right? The most important thing is to be here to trade, to be able to learn from your lessons, but rather not trading to lose all of your account to take you out of the game. Now, let me switch to EU. Switch to EU. I'll switch to EU. And then on the dailies. So if you can see here, this is the trade I took on EU. I closed before it actually came to hit the stop loss. All right, close that. So let's leave that. Let me close that. EU on the dailies. Yes, seen a very nice rejection from the higher time frame liquidity level. Yeah, so a very nice rejection from there. And so price had already closed above this one. So we have this here, this gap here, right? So our main goal is to see how price trades when we get into this gap, right? Or inefficiency level. We'll be watching how price trades over here. Yeah, right. Is it going to give us this, then continuing higher, or is it going to trade through this level and then use this as a resistance level to target this low? We'll see as the days go by, right? But in the meantime, let's just watch. And also, just as I mentioned for the dollar index, I would really love to see price come back to take some of these places. I don't really like the wick. And usually when there are wicks like this, price usually comes to um, take some of them before they continue. This is an example here. You see there was a wick. After taking this one out, price actually comes to eat some of the wick before it continues. Usually that is what price does when it leaves a wick like that, right? So on the daily, see what we have. Yeah, this is it closed slightly below the FOMC low. Maybe, just maybe, this is what I'm talking about. Just maybe price will trade back to one of these wicks. In that case, price would be eating up some of the wick I mentioned, right? Part of the wick comes back to recover before perhaps a continuation to the downside, if it will, right? So this is going to be my level. This is the 50% of it. And also on the daily, we have an inefficiency level there, right? So maybe see this, and then price will come. But then when price gets here, we'll see how price react. If we continue to close below this one, then we use this one to trade all the way to this level. If we see signs that price wants to reject, and then we look for that, then use that for um, a reversal point for the upside. But price is the ultimate key here, right? Price will tell us what to do, and we'll go by that. And we'll see how it goes in the course of the week, because every day of the week we'll be here to analyze what price does after the close of the day's trading, right? So we are now trading back into the mid portion of the entire range. So we'll see how it goes from here, right? But I would love to see price come in here and then give us a reason to short into the mid portion of the range, and then we monitor price from there. The H4, yes, we do have the order flow here says that price is actually bearish, because have this come down, retrace, close above it here, little bit of retrace, and then also close above. So it's likely we'll see this, right? Don't forget we do have this here on the H4. We have a very nice inefficiency level here for the H4. All right, so price can probably come back to it before we see the downside, right? Before we see downside into the mid portion of the range, right? So that will also be it for UUSD. Let's go to GBP USD. So on GBP USD, this is the first thing I am seeing. Price closing below this inefficiency level. So now it is going to more likely use that as a resistance level for continuation to the downside, which is also aligning to what we were expecting on EU. So maybe price comes in here and then go down to this inefficiency level, right? What will be our range? This low to that high, and then inefficiency level is there, right? This low to this high. So we want to see price trade into it. GU is probably much more clearer. Let's see for the H4 what we have. Yes, on the H4, we do have everything pointing down. So perhaps we'll be watching how price does once we trade to the inefficiency level, right? Once price trades to the inversion level, watch for the price action to trade lower into the mid portion of the range. See, we have a very nice one here on the H4 as well, just below the mid portion of the range we outlined, right? So that's it for the day, that's it for the night, that's it for the week. Yes, I also took this one and then lost. So, ladies and gentlemen, that's it for the week. Let me take you back to the H1 to show you the trade. Just see price came down below this and then closed above this. Because I had a short bias for dollar index, I bought right here. But that was what I was trying to explain was, you see, there's an inverse, there's an let me close this. There's this inefficiency level here on the H1. So price trading into it, you don't buy into a resistance level. Ideally, what you do is wait if price indeed closes above that, right? And then I could have bought here, but not rather when we were seeing the resistance. And so let me switch to, this video might be longer than I really wanted it to, but it's important that you understand what I'm doing to also guide you in your decision making. Now I can let me just do this. Switch to the M15. So this is the sweep, and this is the close above, and this is the point where I was buying, right? Ideally, what I should have actually waited for on the M15 was wait to see if price would use this inefficiency level as support for a continuation, okay? Or on the M5, I should see price doing everything possible to turn bullish here, but that didn't happen. But I didn't see all of this because from the H1, I didn't turn back to the lower time frames to look for signatures that tells me that price indeed wants to trade higher. If I had done that, I would have immediately either stopped trading or not taking the trade, because I would see that price was trading below this level, and then also price was closing below this one, which is then telling me that price would subsequently use the inefficiency level as a resistance for continuation lower, right? That's actually what happened. Okay, so I hope this has been truly helpful, educative, and enough for the night. I will end here. We'll see what price does. I'll see you next every day of the week. Tomorrow, Monday evening, when price closes, I'll be here to analyze to see what price is doing to our levels and our key areas. All right. Good luck and good trading. If this was any helpful, do comment, like, subscribe for more. If you have any questions, kindly put them in the comment sections. I'll see how best I can tackle them in the next set of videos. See you later.